Welcome to the Cave Creek Regular Town Council meeting. It's January 20th, 2026. We'll have the Pledge of Allegiance. Jeff, would you lead us, our local reporter?
Pledge allegiance to the flag of the United States of America, to the republic which stands one nation under God, indivisible, with liberty and justice for all.
Thank you. Public announcements from council. Any public announcements? I have none, so we're at the town manager report.
Mayor and council, I do not have a report tonight. I will at the next meeting, but not tonight. Thank you.
Okay. Call to the public.
Michael Weiner.
Hello, my name is Michael Weiner. I reside at 3375 East Glory Road. Today we delivered a formal demand letter seeking suspension of any ongoing exercise of the federal land patents west of 32nd Street and revocation of the intent of Cave Creek to extend Glory Road to 32nd Street. A certified letter is also in the mail. The root cause of all this is the blockage at 32nd Street by one resident. The residents east of 32nd Street and on 38th Street submitted a petition in mid-2005 to have Glory Road opened through to 36th Street. Note that this petition did not mention the rest of Glory Road, nor talk about opening Glory Road to 32nd Street. Without any notification to affected residents, Resolution 2025-25 was passed and steps taken to activate federal land patents along Glory Road and states the intent to extend Glory Road to 32nd Street. A petition to overturn this resolution was submitted by a number of residents on December 15th. I do not believe that the city has taken proper steps in handling this matter. Point one, the landowners west of 36th Street do not want Glory Road west of 36th Street taken over by the city and do not want Glory Road extended to 32nd Street. Believe that the city has overreached in taking these actions. Point two, the city has not considered the recent 2025 State of Arizona versus Foothills Reserve, where the Supreme Court unanimously awarded $12 million to landowners due to proximity damages. In this particular case, the damages were noise, pollution, loss of view, and unsightliness. In our case, examples of damages are noise, loss of privacy, loss of view, pollution, increased crime risks, and probably others. Point three, the State of Arizona versus Foothills Reserve, there was no dispute that the homeowners were entitled to compensation for the taking of their easement interest. In our case, there has been no mention about this from the city. The city may be at risk for the following. Point one, violation of the 14th and 5th Amendments and the Arizona Constitution, Article 2, Section 4, which are all due process type of statements. The city may be at risk for compensation to landowners for those easements along Glory Road. Point three, the city may be at risk for proximity damages, as in that previous case, per the State of Arizona versus Foothills Reserve. I do not have any objections to resolving the 36th Street issue, and perhaps activation of that particular patent may be the right solution. The residents east of 36 seem to be happy with that, and with the city taking control of that, and let them resolve that issue. So please reconsider your actions and potential risks to the city and overturn Resolution 2025 and stop the patent applications while you still can, avoiding damages to the landowners in the city. Thank you very much for your attention.
Thank you.
Melissa Ducey.
Mayor, Vice Mayor, and council members. Melissa Ducey, 3323 East Glory Road. Glory Road. There was a meeting on Wednesday, the 14th, with the residents along Glory Road, the town manager, and the town engineer regarding the opening of Glory Road. There are two issues. One is unblocking the easement that the owner of 3600 East Glory Road has illegally blocked, and I don't think anyone disputes that it needs to be unblocked and accessible. The second issue is, according to Resolution 2025-25, dated October 21st, 2025, that the town plans to open Glory Road to 32nd Street in the future. I am one of the 4 lots west of 34th and east of 32nd to be impacted by the patent being activated. Excuse me. Some say the town may have overstepped their authority to proceed as they are, but that's not my expertise, and I have no comment on that. At the meeting, the town engineer said there is no short-term plan to open Glory Road between 34th and 32nd. So I asked him why activate those patents, and I did not get a clear answer other than they just activated all the patents. So I said, okay, well, why can't we rescind those 4 patents? And he told me it would be too expensive. Okay, so why activate the patents to begin with if the town had no intent of opening the road to 32nd Street? Had the town taken care of the neighbor complaints years ago when the easement at 3600 East Glory Road was being blocked, none of us would be here today. I and 3 of my neighbors and being punished, we're being punished for the mistakes of past administrations and current feuding neighbors, and I want to be left out of it. I've lived off Glory Road for 12 years. I voted for most of you guys, and your job is to represent me. I know those patents can be rescinded, and I am relying on you, my elected officials, to please have the patents rescinded between 34th and 32nd Streets. I'm very sorry. We aren't just patent numbers on a map. We are real people who chose our lots and our houses with intent. And I encourage all of you to come to Glory Road, come west of 34th Street and see what we are talking about if you have not. Thank you for your time.
Thank you. Town manager?
Yes, I realize I can't really get into the discussion of the details, but I will acknowledge we did have a meeting last week. Just before the meeting today, I let Mr. Weiner and Ms. Ducey know that the staff listened to what the residents had to say last week, and we were working on a compromise based on the feedback we received from residents, and we are planning a follow-up meeting to share that with the residents. So I'd be happy to also talk to them more in detail outside. So just want to let you know that this is being worked on.
Great, thank you.
David Phelps.
Mayor and Council, David Phelps here. I'm here to announce that this election cycle has a new feature, and that is we have rented space under the name Informed Cave Creek Voters for candidates and the citizenry to meet the prospective council candidates and mayoral candidates. And so on Thursdays from 4 to 6 between now and the election, we're going to provide this opportunity. January 29th, which will be a couple days after the presentation by the Preservation Committee. We're going to discuss preservation as one of the topics there, and we invite you all that have pulled packets and decided to rerun, you haven't had enough of this pleasure, to join us. And we also are building a website, and in order to get that accomplished, I need to get a bio from you folks, about 250 words with a photo would be helpful. And so we're looking forward to getting better information to citizens and having more opportunities for you guys to discuss the issues with the citizens out there who will come down to the library and meet up. Thanks very much.
Thank you.
No additional speakers.
Okay, then we are down to the main event tonight, and that is the presentation discussion regarding the annual audit comprehensive financial report for the town of Cave Creek for fiscal year 2024-25.
Good evening, Mayor, Vice Mayor, Council. So we have had our fiscal year 25 audit completed. And so we're going to go over the audit results and the financial status for fiscal year 25 with you tonight. We have Richard Gillespie, who is Senior Manager with Advisant, one of our auditors that was in charge of our audit, and he's going to talk about the results of the audit.
Welcome, Mr. Gillespie.
Good evening, Mayor, Vice Mayor, and members of council. Good to see you all again. So we'll kick it off with some of the audit results. So we'll be going over a brief review of the audit process. I don't want to get into too much detail. I'll probably bore you all to death. And then we'll be reviewing the annual comprehensive financial report, the report on internal control over financial reporting, the governance communication, the annual expenditure limitation report, as well as the highway user revenue examination report. So the audit timeline as well as the audit process. So in June, we began the audit by initiating the engagement letter as well as presenting all of our pre-audit communication to you all, which is all required under auditing standards. And then July 2025 is when we came out to do our preliminary field work. That includes assessment of the IT environment, internal control testing, And then as well as some of the special audits that we were engaged to do under this fiscal year. And then in October 2025, we come out and do our final fieldwork, which includes more of the substantive testing over account balances, based on our risk assessment. And then the report was finalized in December 2025. All right, the first of the deliverables is the annual comprehensive financial report. The scope of the audit services includes performing an audit in accordance with U.S. generally accepted auditing standards. Our responsibility is to design procedures to provide reasonable assurance on financial reports, not absolute assurance. So the difference between the two is, we can't test every single balance. We can't be out here year round. So what we do is we do a risk-based audit, including, significant account balances or significant audit processes or financial processes that we'll key in on. The new accounting standards implemented during fiscal year ending June 2025, includes GASB number 101, compensated absences, as well as GASB statement number 102, certain risk disclosures. Neither of these two GASBs, as we call them, or accounting standards, had a significant effect on the financial statements. And then lastly, the opinion rendered was an unmodified opinion, which is a clean opinion for the aquifer. All right, the key pages on the aquifer, it is a large document. Sherry will get into a little more detail after my presentation. But the key pages to key in on is the audit opinion, which is basically the stamp saying, hey, all the amounts within the financial statements are correct based on our testing and assessment. And then page 4 includes the management discussion and analysis, which is management's discussion of key changes in financial activity. And then page 14 is where the basic financial statements come in, which is all the financial data of the town. And that's where most of our opinion goes into, is those account balances and the financial statement presentation. Page 57 is where the budget to actuals begin, which includes a general fund and major special revenue funds. And then onward down, you'll include budget to actuals of all the funds of the town. And then on page 71 is where the statistical section begins. This information is unaudited, but we still verify that any financial amounts agrees to the financial statements that we audit. But they include financial trends, revenue capacity, debt capacity, demographic and economic information, as well as operating information. All right, and then the report on internal control over financial reporting, or what we call as the Yellow Book report. This is the review of internal controls over financial reporting. So we don't give an opinion on the town's internal controls. However, we develop procedures to test the controls and assess control processes of the town. And if we identify any issues, then we determine whether we have to report, whether it's a material weakness or significant deficiency, depending on the extent. However, the town did, based on our testing, did not have any significant deficiencies or material weaknesses to report, as well as no other non-compliance or other matters that sometimes we'd have to report. But so a clean report on internal controls for this year's audit. All right, then next is the government communication. This is our communication to council. We report to you all, which makes us independent of management. So big thing is there's no disagreements with management regarding financial statement amounts or disclosures or anything like that. So that's always a great thing. Rarely we come into those situations, but and then as an advisement firm, all members of the staff were independent of the town. So we didn't have any conflicts of interest during our audit procedures. Significant accounting estimates that go into amounts in the financial statements is the management's estimate of useful lives of capital assets. Depending on the number of lives, they can definitely kind of shift when that expense is recognized. We assess all the useful lives and ensure reasonableness and that it's in accordance with the town's financial policies. Non-audit services provided by Advisant included the assistance in compiling the annual comprehensive financial report. This sometimes impedes our independence. However, there's safeguards on both sides. We have quality review on our sides to go over through the report whenever it's done, as well as Sherry performs a very detailed review of the financial statements to mitigate that risk of us drafting the financial statements. So And then lastly, there was no corrected misstatements, no material audit adjustments that we identified during our audit. All right, the next deliverable is the annual expenditure limitation report. So the town's required to submit expenditure limitation report in accordance with with Auditor General reporting requirements, which is called the Uniform Expenditure Reporting System. So we didn't find any errors within the report, and the town was under the expenditure limitation by 15.4 million. All right, then lastly, the highway user revenue examination report. So any amounts, any highway user revenue amounts are required to be recorded and spent in accordance with Arizona revised statutes. So during our procedures, we'll test, make sure the revenues are coming into the correct fund, as well as all the expenditures are being spent in accordance with Arizona revised statutes. During our procedures for that, we didn't identify any findings. So overall, a clean across the board as far as all the deliverables. And that concludes my part of the presentation. I don't know if there's any questions for you all before Sherry dives into her side of things.
Questions from council?
One quick question. Can you give us that acronym one more time? They used to call it GAP, G-A-A-P, but you have a new acronym.
So GASB is the governmental GAAP. So it's the governmental accounting standards. What was that?
What is the acronym or the B stand for at the end?
The Government Accounting Standards Board, which is the oversight board that issues all these standards. They're the ones that just have fun and just makes our lives more difficult, Just kidding.
Anyone else? Okay, thank you.
Okay.
Thanks, Hubert. Richard.
So I have a presentation on the financial status for fiscal year 25. So we'll go through. I have some highlights from the report. And in the presentation, I have notated what the page numbers are of where you can find the information. As Richard said, it is a large report, but I do highly encourage people to take a look at it because there's a lot of good information in there. So to start off with, so for the governmental funds, so the enterprise funds that we have, which are the utility funds or enterprise funds, basically all the other funds are governmental. And so looking at those governmental funds in total, so expenditures increased from fiscal year 24 to fiscal year 25 by 2.2 million to a total of 17.5 million within the governmental funds. That's a 14% increase. The biggest parts of those increases were related to capital costs. So there was a significant increase in what was being done with the streets maintenance program, trying to get caught up on some of those. So that was an increase about 1.4 million. And then we had some significant fleet acquisitions. So there's the fire engine that it was purchased previously. And we got a very significant discount for making that cash deposit early, but we don't recognize the expenditures until we actually receive the vehicle. So it was received in fiscal year 25. And then also we had the purchase of the water tender truck. So that was 1.1 million for those. So here's a look at based off of the different functional categories. So this is a standard way that expenditures are looked at. So general government, public safety, public works, et cetera. And as you can see in the comparisons between fiscal year 25 and 24, the capital outlay expenditures is where you see that big increase. And again, same explanation there on those changes. For governmental revenues in the governmental funds. So it was an increase from fiscal year 24 to fiscal year 25 of $1 million or 6%. And it really was within general fund and related to increases in the construction sales tax activity. So that was a 1.1 million increase, 8% there. And then looking at the governmental revenues by source, you can see that jump in the bars for the sales tax. And then also one of the other significant changes there with the investment income, you'll see a decrease. And because of the cash balances that were used to be able to pay for capital projects and a lower interest rate than the prior year, that's why we had less in the investment income.
It's kind of an amazing number, $1.8 million investment income on a $12 million budget. That's what, 15% or so?
Yeah.
For the revenue. Yeah, that's,
Yeah.
we're making a lot of money on our account balances. Yeah.
Mhm. So with the fund balances for the governmental funds, so that was a decrease of 5.4 million or 15%. Again, this is related to those one-time capital costs, 2.4 million or 8% related for the decrease of the general fund balance was related to the capital outlay, but then also increases compared to the previous year in the subsidies to wastewater and Cave Creek water. In the non-major funds, so there was a decrease there of 2.8 million or 73%. And there was a significant transfer that was budgeted in the fiscal year 25 budget process to use some of those monies towards the Phoenix Interconnect. And we'll get to the utility funds and some of that, but we did end up leaving the money sitting in the Cave Creek Water Fund and used more of the WIFA funding instead. The governmental fund balance reserves, so small amounts on the non-spendable and the restricted. Non-spendable means that these balances aren't available monies that you can actually spend. And it represents items that were prepaid for the following year. So the money's already been spent. So it's not spendable. Restricted is outside restrictions. On the right-hand side, the committed fund balances, so there's 2.5 million of the reserves. Committed means that council passed an ordinance, so that force of law of these are going to be dedicated for these purposes. And so of that amount, there was 1.6 million for open space, which is those prior tax allocations that were committed to open space that have not been spent yet. And then within the water infrastructure fund, there was about 986,000 that was left at the end of the year in that fund to be transferred in the next year. The assigned fund balances, so this was assigned during the budget process for fiscal year 25 for capital reserves in the general fund of about 20.7 million. And then the unassigned fund balance, which is really only the general fund because all the other funds, they have a purpose that the money is being assigned to. So the $8 million, and of that amount, general fund has 5.2 million in operating reserves. And based off of GASB accounting rules, those operating reserves reside in the unassigned. We don't categorize them in one of the others, but there's 5.2 million in the operating reserves. The policy that we had adopted at the end of fiscal year 25 said that we would do the 3 months with the general fund, the utility funds, and the general fund would hold operating reserves on behalf of those enterprise funds when they didn't have enough money. So this is a combination of general fund, which was about 3 million, and then the remainder was for the utility funds that did not have adequate balances for operating reserves. In looking at support to the general fund and general fund to other funds through the transfers, excuse me. So the transfers from the other funds was really just the one from Spur Cross. So the Spur Cross, what the way the ordinance originally was that it would 100,000 of that amount was for trails, and then the remaining balance in Spur Cross that was available would be split 50-50 between the general fund and the water infrastructure fund. So about 980 of that 50-50 split. And then general fund supported the HERF fund subsidizing about 50,000. Wastewater subsidy was about 90,000, and the Cave Creek water subsidy was almost 2.4 million.
Yes, I mean, why are we subsidizing a HERF fund, which is money we get from the state for roads? Why are we subsidizing that? What's that?
So there was a project that when the bids came in was significantly higher. It was designated to be a HERF project. So as part of that process, and we did budget transfers for that as well that council approved, the difference of how much was available in the fund to be able to cover that project when it ended up being higher than originally anticipated was covered with general fund subsidy. Okay, so looking at the budget to actual comparison for the general fund. So on the revenue side, revenues came in about 877,000 more than what was budgeted, or 6%. A big part of that would be the sales tax that was 767,000 greater than budgeted, or 8%. And that was really due to the construction activity, the construction sales tax portion. Another part that was not anticipated during the budget time was the contribution for the skybox of almost 245,000 during the fiscal year, the agreement with Cave Creek Rodeo. And then again, the investment income was less than was budgeted because of the amount spent on capital projects and interest rates decreasing. On the expenditure side for the general fund, so looking at each of the departments here, so in total, under budget on the expenditure side by $3 million, or 16%. Big part of that is the contingency balance that remained unused of about 712,000 within the fire and emergency. So it was under budget about 700,000, and a big part of this was because they made much faster progress on the station than was originally anticipated. So more costs were in fiscal year 24 than was anticipated during the budget process. And we do the fiscal year 25 budget prep during fiscal year 24 before the end of the year and really knowing where that was going to be. So that's really where that came from with fire. And then Public Works was under about 953,000. And some of that was due to some rescheduling of some of the street projects, but also some of the savings that Hal was able to get compared to what was budgeted for some of the street projects. And so looking at the net and the fund balances for the general fund, so compared to what was budgeted, the net revenue expenditure was supposed to, from a budget perspective, be a negative 4.9 million. It was really only 1 million. So we were about 3.9 million better off than what the budget said. Looking at the transfer, so that transfer from the Spur Cross was a little bit better than what was budgeted by 16%. The amount of the subsidies to the other funds was not as much as what was anticipated, so about 10% less. There's a small amount for insurance coverage, but the net change in fund balance was about 4.3 million better than what was anticipated, 64% difference. And we started the year with a higher beginning fund balance than what was anticipated during the budget process. Slightly 2% difference, the ending fund balance. So in the budget process, it was estimated the general fund ending fund balance would be 23.6 million, and we ended up with 28.7, or 22% better. So, and this is going to be typical compared to budget because there's all sorts of contingencies and things that are built in to make sure that we're covered, because there are very serious consequences if we're not covered on how much our budget is. Any questions on governmental before I move to the enterprise funds? So enterprise funds, they're called proprietary types. And so these are the three utilities. The expense side, so this is GAAP basis, not budgetary basis of what you're seeing here. So from a GAAP basis, the expenditures decreased about 0.2 million, or 2%. So a little bit lower in maintenance and professional services compared to the prior year. And then looking at the cost based off of the categories, Again, you can see in the cost of services about 2% difference there because of those. Looking at the revenue side, so revenues decreased about 700,000 or 4%. And the biggest part of that was within Cave Creek Water, 900,000 decrease related to grant funding. This was primarily related to the SLIFR or ARPA funding that was received and used towards the Phoenix Interconnect project. And you can see from the sources side here, you can see the grants in the last column, that decrease there. The operating revenues did increase compared to the prior year. So 4% there. The capacity fees, so capacity fees are just depends upon what is being done as far as any sort of construction and permits being pulled. So it can vary dramatically. And it was 41% less than the previous year.
Sherry,
Yes.
could you explain to us a little more about the grants? Did we budget for grants that we didn't receive, or explain that to us?
So this is not a comparison to budget. This is a comparison of how much grant revenue was recognized in fiscal year 24 compared to how much was recognized in fiscal year 25. And so grant revenues tend to be one-time sources.
Mhm.
So it wasn't like we were going to duplicate the SLIFR revenue coming in or the ARPA, SLIFR, whatever you prefer to refer
And why
to
don't
as.
you explain to us what that acronym stands for, SLIFR?
So it was all the Recovery Act, the
Oh.
ARPA funding
Oh,
with COVID and all the
Mhm.
recovery money that
Okay.
was provided. So it was about 1.9 million the town had received
mhm.
of that money, that
Mhm.
ARPA funding, and used it towards the Phoenix Interconnect.
Okay, very good, thanks.
Have we gotten all the money yet?
Of the ARPA money?
Yeah. Is there still some out there?
No, that was received a while ago.
Okay,
And then and it took a while before the town actually spent it.
okay.
And
That was common because a lot of towns, municipalities were trying to figure out, especially in Arizona, what am I going to spend this on? Because Arizona didn't suffer the way some of the other places in the country did.
But that's different than the other grant that we got from the federal government,
Correct.
right?
Yeah, that's different money.
Right, that's different money.
So the
The 2 million.
congressionally directed spending,
Mhm.
that's different. The $2 million that's also going to be going towards
I'm
the
getting confused.
Right.
Phoenix Interconnect. Yes.
Sherry, I think the first part of the vice mayor's question though was how we anticipate grants. And can you kind of just say how we do like budgets in the event that we do receive a grant? So how that all works. So we're not going to go over.
Yeah, so
Budget.
from a budget perspective, we put a contingency of $3 million in addition to known grants in the budget so that we have funding if all of a sudden we get some grant that we didn't know about during the budget process, then we'll have the capacity to spend it. Because as I said, if we don't have enough capacity in our budget and we go over budget because of grants or whatever, like it's a big deal. They're going to start reducing our funding that we get in our state shared revenue. Yeah. Okay. From a budgetary basis, here's what the fund balances look like within the 3 utility funds. So wastewater's been at zero. We've had to subsidize. The Cave Creek water is has the debt service reserve that's required by WIFA, so we do maintain that. And then also we had transferred money from the Water Infrastructure Fund that we kind of changed direction a little bit on the way that we were spending it. Originally, we were thinking that we would spend the water infrastructure money first and then use WIFA money later. And if we didn't need the whole loan, then it would reduce how much money that we needed and reduce the amount of the payments. But then with the master plan that was done and all the projects and knowing that we were going to end up going for more debt financing, we said, no, we need to save the cash to minimize how much new debt financing at higher rates would be, because the Phoenix Interconnect was entered into at a time when interest rates were much lower. So that's the balances within the Cave Creek water, that water infrastructure amount of 3.8 million. And then there was also some of the general fund subsidies to assist with the debt service reserve requirements. And then Desert Hills water is below the zero. So it's been at a deficit, but getting better. So there's a little bit of a line there. It's less than the 100,000, the 0.1. So there's improvement with the revenues that have been generated. When we look at this from the GAAP basis and the what we refer to as full accrual. So in this perspective, now we're including capital assets in the balance. So the net investment in capital assets compared to last year increased 6.2 million or 14%. So we added capital assets to the balance sheet of about 9.5 million. But we did have increases in long-term debt because of the Phoenix Interconnect of net increase 3.3 million. The unrestricted did increase because of those amounts of the water infrastructure funding being transferred and the general fund subsidies that were needed. So I have summaries here for for all three of the funds. So this one is for wastewater. So looking at wastewater, the ongoing revenues did pretty good compared to budget. This was one of the funds where we weren't having as much issue with the budgeting process, 3% over expenditures. On the operating side, we're a little higher than budget, but we're offset with the one-time. So the one-time revenues were 138% higher, and actually the percentage there, so 30% really should be a positive because the one-time expenditures were less than what was budgeted by about 30%. So particularly because the one-time expenditures, the capital that was anticipated in the budget process that did not occur, that was a big part of why the subsidy was a lot less than what was budgeted, because it was budgeted at 1.3 million and it ended up being only about 90,000. And also because of sales tax revenue, the construction activity that came in a little better.
But in the ongoing revenues, that's a mixture of fees and sales tax revenues, right? So if one were really looking at subsidies, that's one of the subsidies is embedded in there, which is sales tax subsidy.
What we're referring to as the ongoing portion of sales tax revenue is in the ongoing portion. The construction sales tax, we consider that to be one-time sales tax because you just don't know where that's going to be. So that's reflected, the construction portion is reflected in the one-time. So for Cave Creek Water, so fiscal year 25 was also part of, we knew during the budget process, there was some overestimation on the revenues during the fiscal year 25 budget process. So from that perspective, the revenues for ongoing were about 9% under what was budgeted. The ongoing expenditures were a little higher, but were covered with the capacity with the one-time expenditures. One-time revenues were less by about 46%, and one-time expenditures were well under the budget amount by almost 5.3 million. The WIFA loan proceeds that were received was a little less because we weren't as far along in that process as anticipated. And the transfer from other funds was higher than was anticipated, partly because of the amount from the water infrastructure and Spur Cross and general fund subsidies. So there was a net change in the fund balance of not quite 4.1 million. The debt service reserves that were not funded that needed general fund transfers was about 129,000, and the capacity fees were less than anticipated as well, which is another factor in the one-time revenues. That and the grant funding as well. Okay. For Desert Hills Water, so again, this we knew during the budget process that there was an overestimation on the revenues here. So compared to budget, they were 15% under. Ongoing expenditures were 8% under, so that helped. There was a little bit of one-time revenue that was not budgeted, and one-time expenditures were under what was budgeted, 41%. So that helped make things balance out a little bit there. It was budgeted to have a beginning fund balance of not quite 37,000, but it really started out with a deficit of 289,000. But with the savings in the line items above, it ended up at the end of the year a deficit of only 24,000. One of the things was, as far as helping improve that, the bulk water costs compared to what was budgeted was 182,000 less. So there was some capacity there. There was capital projects savings in all of this, and of course, offset by the overestimation of the revenues. Okay. So looking at the town's long-term obligations, so this includes the private placements, the WIFA loans, compensated absences. It includes our net pension liability. So we have a small unfunded liability with PSPRS, a much larger unfunded liability with ASRS. And so total increase was 3.3 million or 15%. The private placements went down 2.2 million due to the scheduled payments. The increase in WIFA loans was 5.3 million because of the drawdowns for the Phoenix Interconnect, but then offset by the payments that we did make during the year. Looking at pledged revenue coverage, so for our debt, the requirements with WIFA, that we need to have a minimum of 1.2, and if we want to release our debt service reserves with them, then it needs to be 1.5. And with the private placements, then they are set at the 2 times. We're in pretty good place with the coverage, and this looks at just the activity within the year. What is the revenue in the year, and is it the pledged revenue compared to what the amount of the debt service for that particular year? So any accumulation of fund balances does not count in this calculation whatsoever. So Desert Hills is actually pretty good at 2.95 for those WIFA loans. The Cave Creek WIFA loans, so in order to get to the 3.47, we included the general fund subsidy that was added in fiscal year 25 at 2.4 million. Otherwise, it would have been under what was required. And this is something that we've talked to WIFA, and they said, yes, you can include general fund subsidies. And then the excise tax, we were very well off there with the 6.69. Looking at our cash and investment portfolio, so we did have conversation in the fourth quarter report and even in the first quarter report for fiscal year 26. We have a decrease of 6.8 million compared to fiscal year 24 in our portfolio, but that was because we were waiting on the reimbursement from WIFA that we had been waiting on for a few months of 6.4 million. We have received it now, but we were waiting on that for quite a while. Looking at TPT revenues across all of the funds, so total increase 1.6 million or 18%. And in order to see, because we do all these transfers of the TPT revenues, I find it beneficial to look at after those transfers are done, what was the benefit of the revenues that were earned within the fund and in addition to how much was transferred. So general fund benefited in addition with the spur cross transfer. There was an increase of about 1.5 million to the general fund. Spur cross, so did have a significant upswing on that. There was some catch up of some transfers in fiscal year 24, so that kind of skews the comparison there. The water infrastructure fund did have a little bit of a decrease, and there was slight increase for wastewater. Part of what we did during the budget process was go through and clean up the way some of the allocations had been done in the past, the TPT revenues. As far as taxable sales related to the TPT, so here you can see the reason why we say that the revenues went up is largely because of that construction increase. So it was an 84% increase in the activity for construction. Most of the others fairly small. The commercial renting and leasing did go up 10%. I think maybe some of that might have been people realizing they were maybe paying in the wrong category, would be my guess is what some of it is. But like retail was essentially flat. Restaurant and bar was actually down a little bit. But there was some adjustments in the restaurant and bar category. On the annual expenditure limitation report, so Richard has shown we were under the limit of $15 million. And so just a little recap here of where that came from. So we had grant contingencies and other contingencies of about 3.7 million that were not spent. The 1.6 million budgeted of the open space balance, the placeholder just in case we needed to use it, was 1.6. And there was 8.5 million of CIP budget capacity that was not used. Are there any questions?
Questions from council? Cynthia.
Thank you, Mayor. Just one, I know during fiscal year 25, we were just in the process of changing banking procedures and the bank of choice and everything. Did that provide additional efficiencies that you could tell through the fiscal year report?
We're starting to see some efficiencies, but there's still quite a lot of those services that we're in the midst of implementing. And it's really been on staff. It's not been on the bank. And they've been very accommodating of our lack of capacity to tackle some of these things because there's been a lot of projects on our plates and we're working on it, but
Thank you.
we'll get there.
I had one question. So retail trade decreased by 1%.
I think it was a slight increase of less than 1%.
Okay, so my question is
Yes.
that a combination of all of our town core retail operations plus Carefree Highway retail?
It would be all retail within the town of retail that is taxable because some things are not taxable. And then there's also things that if people are buying online and having delivered to their home, then those are supposed to be taxed at the location of the home where they're being delivered. Not like say where the warehouse was that it came from. So it's online purchases as well.
So I guess my question is, should we be concentrating on supporting our local businesses more since they're obviously seeing a decrease in revenues?
So that was not a decrease. It was a slight increase, but less than 1%.
Right.
So of the taxable sales, an increase about 1.1 million.
I see. Got it. From 24 to 25.
Any reason for the restaurant and bar to go down 4%?
So there were some adjustments that taxpayers did and the ADOR processed. And when they do that, it's not necessarily specific to that year's revenue, but you don't go back and restate previous years. So it was a few years worth of revenues that were adjusted. And I can't tell you much information because it's confidential.
No, that's fine.
Other questions? I've got three. One is that inflation would have brought those numbers up naturally. So that looks like an actual decrease in retail and restaurant activity by the numbers you have here and plus whatever inflation would have been.
Yeah, so I don't have information as far as like, did the businesses raise their prices in line with what inflation was? I don't know.
Oh, okay. The second question is the $8 million we didn't spend in CIP. What projects, I mean, they all seem so absolutely critical. We had to spend the money. Why didn't we spend the money? That's a lot of money that we didn't spend that were.
Yeah, and so I don't have a detailed listing of with me of what those projects were, but it does add up. You know, some of them aren't even like large projects, but the numbers tend to add up quickly. Some of it's just timing of when projects really kind of get started and how far they progress during the year compared to what was asked for at the budget time. So there's some of that. Some of the projects just didn't get started during the year, or maybe they got started but it had no cost from my perspective looking at accounting records. There was nothing started. And there's a variety of things that it can be, but I would say that it's actually rather common to see that there's a lot because typically it's like, oh, we want to get this project going, we want to get this project going, and then things happen and there's not the staff capacity to be able to do some of the things that we're hoped to do.
Okay. In my previous life, if we didn't spend the money, they would say, what? Well, we could have given to somebody else, but anyway, yeah. Construction activity. Why is construction? I mean, we're not building any subdivisions. We got the big apartment going in at the east end of town. Is this all residential? Is that accurate?
So the construction category is all construction. It is not just residential. It can be commercial construction. It can be all sorts of different construction activities. So what construction it was, I wouldn't be able to tell you. It's confidential information. So
is it residential?
You'd be better off asking someone like Luke of, okay, what permits did you issue?
I see. Okay.
And remodel.
Remodels, yeah. Any last questions?
I came up with one more. Thank you. On the pledge revenue coverage, is that rate determined differently for each of the loans based on the amount of the loan? Or how is that determined, the coverage requirement?
No, it's looking at what are the net revenues. So you take basically like essentially like operating revenues less what your operating costs are. And so that's your net revenues that you had available to pay for debt service. And then you compare those revenues to what the debt service payments were. And if you had at least 1.5 times of that, then you're in a good spot of covering and meeting requirements. But we were enough ahead of that to be well within what our requirements were.
Thank you.
Yes.
Okay. Anything else on this subject? Okay, so I guess we're finished with this one then.
Yep.
You're finished. Thank you for the clean audit report. Thank you for achieving a clean audit report.
Thank you.
The last thing on here is the consent agenda, the approval of December 2nd, 2025 regular town council meeting minutes. Is there a motion to approve those?
So moved.
Okay. All those in favor?
Aye.
Opposed? Motion carries 7-0. Thank you. I guess we're at a motion for adjournment.
Wait, I have something. In our 2025 annual report, I knew I saw it, Development Services by the Numbers, the town of Cave Creek processed 405 permits in fiscal year 2025, adding a total evaluation of $48 million, 956 of new buildings and structures, both commercial and residential.
Okay.
The Development Services Department conducted over 5,253 inspections during the same period. So almost $49 million.
That's a lot of inspections.
Total valuation.
Thank you. Okay, so do we have a motion to adjourn? I think we did.
Yeah.
Yeah, okay. All in favor?
Aye.
Opposed? Meeting adjourned.